Hello everybody, welcome to TraderMerlin Show. Hopefully not messing up my recording today. Yes, everything looks solid. Colors kind of coming back. I got some new curtains on order, so hopefully everything will be fine and dandy in no time. Boy, howdy. I was kind of probably going to make reference to people like Joe Rogan and Fear Factor today, given the way these markets have been moving. Loving it. I hope that, I hope that many of you were short out there today. Fortunately, some of the positions I bought a couple weeks back are doing very good. Again, I'm still long QID, which is a double short market. I'm still short Facebook, still short Snapchat, and got exercise today. I will get exercise on some SPY puts that I sold, and we'll figure out how to manage that one on Monday. But all in all, still a great trading week. Now, I'll normally give a big shout out to everybody. I just don't have a lot of time today. As you guys know, I have an appointment I need to be at 3 o'clock. And as you notice, Southern California traffic's a nightmare. So I'm going to just jump right into things and start off with our little toast to the trading week wrap-up. Trying to come up with some fun little graphic to have fun, but this is what I've got. A little bit of a sell-off here, and I'm going to start with the numbers. We'll look at each one of these individually, but let's start with from the bottom to the top. Weekly performance, pretty ugly. These are the type of weeks I love. I love down weeks, but we start things off on the negative slope, of course, with cryptocurrencies and digital assets, which are just bleeding right now. Down 13% of the week for Bitcoin. The Russell was down 8.36%. NASDAQ down 7.7%, followed by the S&P, which normally is balanced, down 6%. Dow Jones down 4.8%. You had gold up 0.85%. And finally, oil up 1.15%. So pretty much negative across the board. Of course, commodities, that inflation hedge per se, looking good over the last few days as well. That is the ugly stuff. Good evening from El Salvador. Wow, good to have you, Chef. Spending some Bitcoin on the beach down there. On the grand scheme of things, it was a pretty ugly week. Now remember, it is options expiration, and a lot of times markets are manipulated and pushed to reach certain strike prices, run it down so that most of the options are going to expire worthless or up, depending on which way that market goes. But certainly tons and tons of activity in the equity markets. Now let's break down some of those markets here individually. I mentioned the worst performer out there, Bitcoin. I still stand by. We're going to 30,000. I think the trend is your friend. And right now, I think you have institutional pressures are pushing this thing down. What this means is at a certain point, there will be amazing, and I mean absolutely capital A, amazing buying opportunities in crypto assets. I still stand by Bitcoin being $100,000 by the end of the year. Remember, that's a call I made almost 2 years ago. I know, Tom, markets are manipulated. Say it ain't so. Yeah, they're manipulated. And speaking of which, thank you for doing that. We did not orchestrate this at all, but I thought I would, since you said that they're manipulated. I haven't done a segment like this in quite some time. So let's throw in a donkey of the day. That's right. Get the little yes. Donkey of the day is a segment I haven't done in quite some time, and it deserves to be done more because sometimes there's some people in this industry that you look at them and they're on the upper echelons of this market. They're the ones that we look at and just go, "Oh, you're so amazing! You're so amazing!" And then it's like the Wizard of Oz. You pull the curtain back and you realize they're just a jackass. And while some people, I think, have a good sense to help others, and I try to bring a lot of those that are helpful, good people on this program, there's a lot of other people out there that I think really do damage to, I guess, people's accounts, to perception of financial markets. And again, when you really dig down, you should always do your research. You find out that some of these people are just not operating in your interest, but in their own. So since we're talking Donkey of the Day, I know this is going to come as a shock. Jim Cramer. That's right, Jim Cramer. Yes, the guy who hosts Mad Money. He's my Donkey of the Day. And for those that may not have seen it, let's go and show you what happened with Netflix last night. Right, here's NFLX. We looked at that at the end of the show yesterday. I'll remove volume because volume is clearly obscuring this chart. But you can see it's way down here. Right, it's at 396 right now. Massive down move, and you can see it was at 700. We're down at 390. So you're talking almost a 50% drop in a month and a half. Right. So here's why he's a donkey, and I'll be politically correct. I won't say the two-letter word that starts with Jack and ends with an S, but he's a donkey. Why? Look at his tweets. Here's his tweets, and he does all the time, and I thought you guys might like this one. Notice on January 3rd, Netflix, buy. And my problem with this is so many retail investors are going to read that and they're going to go out and they're going to buy Netflix thinking Jim Cramer is the best. Oh, he used to work for Goldman Sachs. He's a hedge fund manager, blah, 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 blah. Well, let's go see what happened on January 3rd, shall we? Riddle me this. So here is this year. I'll put a vertical line on January 3rd. Clearly, you guys can see it's been down. I tweeted this out today, by the way, and I think that Jim Cramer blocked me because I'm like, do you get paid by institutions to promote this shit? I mean, sorry, this garbage. You guys can see right where this vertical line is. When it was at $600, that's when he said, Netflix, buy. No misconstruing his word. Netflix, buy. That's really what he was saying. And now we're down $200 per share. That's a 33% decline in price off of Jim Cramer's puts. And if you think maybe I'm just being a little bit rough on him and, be nice to him, you know what? Here's what you should do. Go out to YouTube, and I will show you the video right now. I'll post the link in chat. Go out to YouTube and watch this interview. If you're listening to the podcast right now, just go to YouTube and type in Jim Cramer explains the basics of stock market manipulation, or just type in Jim Cramer manipulation. Now, I'm going to post it in chat. Guys, don't all go and watch this right now, but later on when this show is done, watch that link. It clearly shows you how somebody utilizes the media, utilizes their connections in the media for their own financial gains and pushes things. And here he is on the biggest financial media channel, Jim Cramer's Mad Money, still one of the top watched programs out there, absolutely manipulating markets. Maybe he meant puts, then he would have said buy puts. There's a huge difference between saying buy Netflix or Netflix buy puts. That's like saying jump off the cliff or climb up the mountain. Those are two completely separate directions. I'm pretty sure he meant to buy Netflix. And I questioned him. I said, who's paying you? You work for Goldman Sachs, you run hedge funds, you run thestreet.com. I mean, he is connected. All right, sorry. Anyway, I'll back off. But that was all. Thank you, Tom, for getting me started on that one. We officially have, I think it's our first donkey of the day for 2022. Anyway, do your own research, people. Make sure you check your sources. If anybody, including myself, I would never tell you buy, right? Or I'd never tell you sell. I would tell you, hey, I'm thinking of buying here, and here's why, and make your own decisions. But anyway, I just, unbelievable. All right, let's keep going. Let's go to our market so I can get out of here on time. When we look at what's happening with this market situation as we speak, obviously crypto, it's a bloodbath. I have a lot of dry powder right now, but I'm waiting. I'm looking to buy much deeper into this. Granted, I'm still holding a lot of long positions that are just getting decimated right now. It's okay. I'm all right with that. I'm definitely in a 10-year, 5 to 10-year camp for Bitcoin and a lot of these other cryptos. So pretty ugly on that front. Moving up, that Russell 2000, man, we broke below that little yellow box, and I think Tom said yesterday, we're going to have to find a new box. Well, remember I was saying that we're going to be looking for this zone that's the next it's an okay demand zone, not great, right around 1976. Man, we're at 1984 right now. I mean, we almost hit that level today. So there may be some good buying opportunities coming up on Monday if you get confirmation. Again, I would wait for confirmation before buying anything. If fear and panic does set in, if we do get Russia invading Ukraine this weekend, this could certainly plummet much, much further than this. But that's where we're at there. Technology. Thank you, Facebook, for adding to at least some of my gains today. Facebook and Snapchat just getting murdered out there. But notice where the NASDAQ is. You're right at probably the most critical demand zone on this chart, because after this level breaks, there's really not a lot of quality zones until like 13,000. That's a huge potential drop here for the NASDAQ. All in all, I'm expecting there to be a bounce. Next week, probably Monday, Tuesday, and then we'll see what kind of pain point comes in if this is really a strong conviction sell. Remember, we have a couple major announcements next week. Number one, on Wednesday, you got the Bank of Canada as well as the U.S. with rate announcements. That'll be interesting. And then on Friday, we have the most important piece of inflation that the Fed is looking for, which is the PCE Core Price Index. That all happens on Friday. So huge stuff happening next week for the markets. All right, I'm going to keep going up here. S&P 500, same thing. Broke through those key demand zones. Let's go there. Broke through that key demand zone right around 4,500, which say, look, 4,500, get short. Well, we may quickly be approaching this 43.28 mark. All in all, down 2% on the day. Ugly, and this one looks like it's going to continue a little bit further before finding any area to bounce off of. Now, the Dow was your best performer from an equity index perspective, but it's still ugly. right? Again, we're coming into demand. And I'm not saying, and I always want to preface this is not the end of the world. This isn't like, oh, the apocalypse is here. It's just saying, hey, we're seeing a pretty sharp sell-off. It's an official correction. If you notice some of these indexes, like the NASDAQ, I'll go back here and I'll throw on my 200 period moving average. You can see we have officially closed below some pretty significant numbers. We officially have a close below our 200 period moving average, and not only that, but it's accelerating quickly. You guys might remember I do a discussion about moving averages and how they're like a rubber band aspect towards price, right? We were getting our snap back to the wrist, and you're probably going to get some decent follow through here. And if fear really does precipitate, how do we measure fear? You guys tell me, what's one way to measure fear on a price chart? Right? Obviously, the size of the candles is one area to measure fear, but there's another pretty simple technique. We actually talked about this yesterday with Caitlin Okram on the program on how she is reading different emotions in the market. To me, there's a very simple way to do that, and I'll wait for your answers to come through. Bear for the NQ is coming? I do believe so. I think what we'll get, Big Ab, and it's unfortunate because I did not get a chance to buy my puts. I think what you'll get is you'll probably get a bounce next week. Where to? My guess is up to the 200 period moving average, and then it'll start to sell off again. But that's just my guess. Margaret says the VIX is one way. Yeah, that's the classic fear gauge, right? A lot of fear spiking this week. But another way, you can see people panicking. This to me is smart money, right? The VIX is basically, for those who don't know what the VIX is, it's considered a fear gauge, and it measures the ratio of puts to calls on the S&P 500. Let's be honest, the vast majority of investors and novice traders have no idea how to use options. So do you think they're using VIX? No, they're not using VIX. That's more of a professional thing in my opinion. The easy way, as some of you are posting in there, volume, right? Volume, think of it like the stereo knob on or the volume knob on your stereo, right? When you turn it up to 1, it's like, oh yeah, yeah. You get that volume up to like 5 or 6, it's like, woo, yeah. You get it up to 12, you're blowing your eardrums, the speakers are rattling, neighbors are calling the cops on you. That's where you start to get problems. So from a volume perspective, what does it look like? Well, let's go look at the NQ here just to give you an idea, and I'll add volume back on. You can see that volume was significantly higher than it has been. I mean, it's the highest spike of volume we've seen since this last market crash in March. So this is basically climactic volume, when we get very high spikes of volume during a sell-off. To me, this isn't exactly climactic. I actually would expect to see this much, much higher if, in fact, this was a panic sell blowout bottom, right? So given this, it feels like momentum is just picking up. The good news for everybody who's long is it's Friday. That's right. There's nothing you can do. Stop the presses. Boom. We just take a pause for the weekend. And then Sunday night when the futures markets open back up, then we can start biting our nails again. But you can breathe for a minute. The bloodletting has stopped, but it may continue. I mean, who knows what the future holds. But those are the major market indexes that I've gone through. And then you look at gold, right? Gold still, in my opinion, isn't anything special. It's still traversing in this giant wedge formation. So big deal. SLV is looking a little better, right? It came right up to its 200 period moving average. I think you're going to challenge this 200 and actually potentially break above it. I read somewhere, and I need to do more digging into this, that something like, I think it's Bank of America has like a 99,000 ounce short position or something even bigger than that, like a multi-million-dollar ounce short position in silver. I'll research that this weekend and maybe get back to you guys with more info on that one. So, other ways we can measure when the panic sets in, broken demand zones or breaking swing price levels. For us, I would say you're absolutely right? Because most of you are Online Trading Academy graduates or understand supply and demand. Again, the vast majority of retail traders, your little Reddit guys that are out there in some Wall Street Bets chat room, they don't know squat about supply and demand. They're just buying what people are telling them to buy. At a certain point, the pain becomes so substantial for them, they just sell. And that's usually when everybody else just capitulates and dumps. That's the moment where you find amazing buying opportunities. We've only just begun. That's right. Gotta love the song by the Carpenters. I actually think maybe We've Only Just Begun is a good one, but I also think you could resurrect Jim Morrison and say, this is the end, my only friend, the end. No, just kidding. Remember, there is no end to the markets. It just means we're getting a turn, which is great, especially for any of you who have started after 2009. If you started trading from March 13th of 2009, any point forward, you really haven't experienced a bear market. They're fun. They're great. They are, and I know this sounds absolutely horrible. Don't hate me for this one, but as a trader, I love bear markets because what you know is the vast majority of people are cringing. They're in pain financially, and here you are, most likely short as that thing's drifting down, going, you guys lost to 8 to 10% of your portfolio. I'm up 25. How you doing? Learn how to trade these markets. Anyway, sorry. I'm cruel today. See what happens when I don't have a drink on a Friday? This is what happens, folks. This is what happens. All right, let me, real quick, how much time do I got left? All right, cool. I went through this very, very quickly. Is there an inverse Cramer ETF? No, but I did build a portfolio years ago that was the inverse of Jim Cramer's calls, and it actually was performing rather well. Now, when you're in a tremendous bull market, he pretty much says buy everything, right? Buy. He very rarely says short. So from that perspective, in a bear market, over time he's going to look good, right? He may not, his picks may not beat the overall market performance, but he's still going to look good. Yes, I see many of you say stopped watching him years ago. Yes, it's pretty crazy. A sucker is born. P.T. Barnum said it every minute. What's up, Chris? Good to see you. Happy Friday, my friend. Merlin, why did you sell the SPY puts that were exercised? I didn't sell, so I had SPY put. I was one. I had like 40 grand in a portfolio that I was like, I just want to put it to work for, it was like a week, and I did it a week ago. So it was a real short-term one on the SPY. Let's go SPY. And it was back when we were way up here. I think it might have actually been this dip, and I ended up selling. I don't remember exactly when it was, but I ended up selling the 450s, expecting this level to hold here for like a week and a half, and it didn't quite make it. Yeah, it's all right. We'll have to do damage control on that one starting next week because I'll be put that at 437, which means I'm down about $1,200 on that. I think I collected like 200 or 300 bucks worth of premium, so down 900 overall in the position. We'll have to see how it transpires next week, but it's not worried about it. All the other ones brought in more income, and the silver's been doing really well also. Let's see. Walter, it says, yep, how I feel when I don't trade on a 3% down day. Don't worry about it, man. You know why? Because there's going to be another 3% down day. There's going to be a 10% down day. I mean, there's always going to be a day that we regret that we didn't get a chance to jump in on. It's just the way it is. So don't let that get to you. Every time you have that feeling, think of this. I could have been loading the boat long today. And that'll make you feel good about missing the day altogether, right? Because you would have been smoked if you were long today. Naum says, what about Bitcoin? Well, we actually start off with Bitcoin. That's your worst performer. And again, I think it's going lower. I think it's going much lower to the tune of about at least 25% lower for Bitcoin. But that's my 2 cents on it. NVAX, almost all the call options expired. Worth it say, looks like they drove the price down on purpose. Yes, and it's not just NVAX, right? You're talking about a lot of, let me just type in NVAX here. A lot of the market, I think, was manipulated for that, knowing that expiration was happening today for a bulk of these options, at least the monthly, which is much, much bigger. I think that there was manipulation to push those options down and destroy a lot of those puts that people might have had, or calls that people might have had on the market. So I think a lot of them are going to expire worthless. It's just what it is. NVAX, ugly chart, man. That is brutally ugly. Let me show you guys what I'm looking at here. Here's that NVAX, and it's funny because we had this level drawn as a potential bounce point. Notice it did bounce a little bit and then gave it right back, which is absolutely why you use stop losses. All right, I'll see you buy at 28,000. I'm going to buy at 30. I'll probably buy at 30, but I'm not going to buy a lot. I'm going to buy a little bit at 30 because I think that they're going lower. I actually was going to pull the trigger on one called Loop Ring. Here's Loop Ring. You notice the chart for Loop Ring. I don't know why my levels aren't here, but I had this kind of zone right here mapped out. And you notice we came down to that over the last couple of days, and I was like, man, I'm going to buy it. And I held off. I just feel like the momentum is just too strong right now. I feel like there's just a mass unloading of profits. I think you're getting margin calls off for a lot of people. So, I'd much rather buy Loop Ring down at 40 cents again. I think long term, it's going to move back up. I think that a lot of these have great potential. I mean, you look at something like Solana. It's getting slaughtered right now, right? Just getting absolutely murdered. This thing was $270 or $260 just a couple months ago. Now it's trading at 110. Deep discount. If they can do what they say they're going to do, great, but I've got levels here where I'm interested in buying at. Really, the next one I'm interested in is $93. So I might buy some more. And again, this is where we have to define what our styles are. With regards to crypto, I'm a buy and hold person, right? I'm going to buy it and hold those for quite some time unless they go parabolic. When something goes parabolic, I usually dump it and I'll buy back in at a lower price. Merlin, how does the saying go? Small caps lead in the bear market, or is it vice versa? Yeah, typically the Russell 2000 is the one that rolls over first. It's always been this quote-unquote canary in a coal mine. So when you see the Russell, when you see the Russell, let's go to IWM or RTY, do what it's doing, right? It was just basically hovering above this line for almost a year. It was awesome, right? I know Tom's here and others were trading the spread options on this one. Great, right? Looking great. Well, all of a sudden, it breaks down and breaking aggressively. This one, from a percentage perspective, right? We just looked at it for the week, is the worst for the indexes, down 8.4%. The NASDAQ was down 7.7, S&P down 6, so it's leading the charge right now. And part of the reason for that is if markets go into a sell-off, they go into a nosedive, you don't see too much M&A, merger and acquisition. When markets are bullish, you do see a lot of merger and acquisition. People are buying other companies and trying to, remove competition because they have a lot of paper profits for their stock, and they use that to buy other companies. Well, that helps push the Russell up. So in theory, in a bull market environment, the small caps should be having a greater rate of return than your normal equity indexes like the S&P. So if it's a great bull market, NASDAQ's going to beat the S&P. If it's a great bear market, NASDAQ's going to, sorry, let me rephrase that. If it's a great bull market, the Russell should be beating the S&P to the upside in gains. And if it's a bear market, the Russell should be beating the S&P in losses to the south side. Just typical. I'm a yellow box farmer. Next one will form soon. Yep, and you know that, Tom, right? You know that one's broken, and you're probably going, damn it, it was so good for so long, was awesome. You will find another one. You will find something. There's always something else around the corner. So you might have to reinvent a different style or try a different tactic for a while, but you can always find something that's moving sideways. May not happen for a while given this volatility, but it'll be back. Marcus, what about Luna? I like Luna. I still think Luna's a little bit overpriced, but as far as a project goes, they're amazing. What they're intending to do is pretty incredible. We talk a bit about this in the CIL program that I'm running on Thursday nights and Tuesday mornings. Luna, I think Luna is going to actually be under some scrutiny from regulators, more so than things like Bitcoin and Ethereum, because it challenges the entire financial system with the way they create synthetic instruments. So I'm very bullish on it from what they can do. I'm bearish on it from the perspective of I think they're going to be the target of regulators because of what they do. So I know that was kind of ambiguous, but these are things I cover in my CIL. By the way, if anybody's interested in understanding more about cryptos, you can go to the link down in the chat in the description of this video. I have a 6-video free program on cryptocurrency, which of course is a gratuitous promotion for a digital assets program, which I created for OTA, which of course is a promotion for a physical classroom. So anyway, there you go. My tactic is still working, just a little more work. Yeah, cool. Hey, base hits, right, Tom? Just keep hitting. Doesn't matter whether it's rain or snow or sunshine. Just keep hitting base hits. Base hits, base hits. Base hits turn into doubles. Doubles turn into triples. Triples turn into home runs, and that ends up being a winning season. Done. Was going to sell Microsoft puts, but we'll wait for those earnings to pass. Yeah, Microsoft's reporting on Tuesday, I believe. Is it Tuesday? Yeah, I think Microsoft's on Tuesday. So I would. It's tough. It's a tough one because if you're selling puts, you're going to get more premium, right, Big Ed? You're going to get more premium. So that's tough. Selling right after the earnings announcement is the premium just gets sucked out of those options. So if you're selling, you can go very, very far out of the money and probably get a lot of premium. But again, you're taking on some risk here in that setup. All right, what time I got? Oh, my goodness. What else do I have? I had some questions here. Okay, there were a bunch of questions that came in. I apologize. I won't be able to get to those. Again, I have to go to a doctor's appointment here, typical stuff. But I will get to as many as I can, plus the chat that you guys got coming in. So I'm going to start with this question here. Tom, since you're here with us, he says, for my directional trades, I am fairly diligent about using stops. The problem is that stops get gapped overnight and the equity can run for a while before damage can be controlled. Besides setting an alert along with the stop, what else can be done? Well, I'll tell you what else can be done? In regular market hours, that's obviously stops are going to work. Depending on which platform you have, you can do you can use stops in the after hours session. I know a lot of people are going to be like, what? Oh my God. You cannot use a stop market order in the after hours session, right? So stop markets, they removed those years ago because people like me were literally preying off of other people. It was it was literally taking candy from a baby how easy it was to manipulate and pick people off in the after hours session with market orders. That said, you can, so when you look at your order types, when you place them on your computer through your trading apps, if you're using Ameritrade or E-Trade, probably not going to work. But if you're like on something like TradeStation, I believe it's on some of the more advanced direct access platforms, you select your TIF, your time in force, right? It'll say TIF on the screen. When you do that, you can say day, which means just for the day. As soon as that closing bell rings, trade's dead. You can use a GTC, which says when the closing bell rings, the trade, the stop is no longer valid, but it starts back up on when the market opens, right? That's a normal GTC order, and it will stay in the system until it's executed or canceled by you. You can do what's called a day plus or a GTC plus order. Now, if you have the little plus icon, what that means is it will go into the after hours session. Now, of course, it's not going to let you use a market order, but you could do a limit order and set a condition. So let me explain this a little bit further because it's really important that you understand the right way to put these orders in the system, because if you do it wrong, you're going to get absolutely hosed. That's funny. I'm supposed to be on a call right now, and my phone is just lighting up. So let me add in a new slide. I want a blank one here so I can draw on it, and we will go, I think I can go up. There we go. So don't worry about the weekly performance. I just did a little copy thing. So let's say, for example, your stock has done, come on. There it is. Oh, no. We want to go. There you go. Blank screen. So let's say you're trading and it's done this, right? And here's the end of the day. And it's closed right there. And you're thinking, well, I want to protect myself, right? So if you do a stop loss, it's not going to work in the after hours session if it's a market order. So I guess I should probably get off myself and show you, because I know you're like, I'm staring in your screen. Here we go. There's the chart. Sorry about that. So if you have the close right there, a couple things you can do. Obviously, if you put your stop, come on, Merlin. I hate these drawing tools. And let's say it closed at 20 bucks. I'm just making these numbers up for simplicity, okay? And you say your stop, you want your stop at, I know, I see you guys chatting that I'm on the wrong screen. Your stop is 19 bucks, right? There you go. So you'd like your stop loss to be right there. So if you did this, you went stop, and you did market at 19, it's not going to work in that after hour window. And let's say this is, I'll put over here, this is after hours. And this is the next day. So let's call this 119, and here's 120. Okay? So we've got days separated, and this is the middle piece here. This is after hours session. Okay? So your market order is not going to work there. So what you could do is, instead of doing a stop market, you would change that order type and change the market out. And you would change that to a stop limit. Now with a stop limit, you have to do two things. There's the trigger, which would be, let's say 19, but then you have a limit order. So the problem with a stop order is, guys, if in the after hour session it falls and hits 19, but is moving quickly, you're not going to be, it may skip your stop loss. So here's where you do something like this. You go at, I don't know, 1.8, I don't know, I'm just saying 75. Why is that? Because basically what you're saying is I'm allowing for this 25 cents worth of slippage to happen. A stop limit order will work in the after hour sessions if your platform allows it, right? So to me, that's probably one of the best things you could do, Tom, to protect yourselves. You guys see my screen now. You should. Yeah, you guys can see it right now. So that's the main way you could do it. The challenge, Tom, is, if you're in individual stocks, you may not have the protection that the market access, meaning you might not be able to buy specific options on that security, which is why, I generally stick to ETFs if I'm doing longer term swings. Why? Well, because they're more liquid, they're more diversified. I don't take on that single stock risk, that type of stuff. So to me, that's the explanation as to what you could do to protect yourself and kind of why you should think about stop limit versus stop markets. There you go. You learn something new every day. I'll be invoicing all of you directly. No, I'm kidding. Yeah, that's stuff that, they don't, where do you find it, You just kind of learn through trial and error. stop market orders back in the late 90s. It was so funny because what happens is, here, let me just show you why this was such a great thing for me back in the 90s. I love it. So let me get my screen again. I'll make sure I show you guys this time. There's the screen. So let's say you've got your level 2 screen here, right? And so for those who don't know, level 2 just says, here's your buy orders and your sell. So you got your bid and your ask. That's the market price, right? And during regular market hours, it's usually like 1 penny. So let's say I'll just do $50.10, and over here you got $50.11, right? So you can buy it at $50.11, you can sell it at $50.10. You lose a penny per share. That's what the market makers are given. But when the markets close, all of a sudden this liquidity dries up because market makers are no longer obligated to make a market. And while it may have been trading at $50.10 when the market was open, all of a sudden the bid side, I'm not kidding you, would drop to like 41.30, and the ask would be like 75.20. It's just crazy numbers because nobody wanted to commit to buy or sell. So what I would do is I'd come out here and say 41.31 to buy, or I would short at 75.19, and I'd be the best market. And as soon as somebody like got triggered in the after-hour session or did a market sell because they wanted to close a position after the bell, I'd get filled at 41.30. And then the next morning, I just keep it to the morning opened and sell it when the market opened at $50. I mean, it was such an easy thing to do, but most people had no idea that market orders were that dangerous in the after-hour session. So they stopped doing that. Now you have to use stop limit orders in the after-hour session. All right, there we go. Lesson for the day. All right, other than that, Tom, options. You could hedge, you could be using the futures markets as protection, but every time you buy some protection on your positions, you're giving up a little bit of potential gain. I guess it's just how concerned are you? Like I think it was Big Ed was saying, oh yeah, there it is. I was going to sell Microsoft puts, but we'll probably wait for earnings to pass. Hell, I mean, that was so crazy what we saw happen with with Netflix. That was a pretty big down day. Yeah, real ugly out there. And it's not just Netflix, guys. There's a lot of companies just getting absolutely crushed right now on earnings. And remember, tech, we said this last year, tech has been leading this thing up so dramatically. Tech will lead this thing down. And here we have today, I'll show some of the big tech names. Oh, we're not having Caitlin on the phone. That was yesterday. You look at, here's Google, right? Google clearly rolled over, guys. This trend is over. This uptrend is over for Google. You're no longer making higher highs. You're actually making lower lows, and you're breaking through some major moving averages. More pieces are lining up here to the downside. You look at Facebook, right? Facebook is still holding this line, still holding it at 300. You look at Microsoft, one of the better out there, rolling over. It's still, to me, it's okay because it hasn't broken this major psychological 200-period moving average, and you're coming into a couple more areas of demand. But I'll tell you what, Microsoft below 280, Ahooga! Here we go. All right, you're going down even more. What else did you have? Tesla. I know it's not necessarily tech, but Tesla's still holding here. So, there are some that are still holding it up, but the vast majority of the big dogs, they're bringing it down. And that may continue for quite some time. I mean, Amazon, you had a 6% down day for Amazon. And you notice what Amazon's been doing for a year. Slow, slight trend up. Well, that, my friends, is what Count would say over. No more party for Amazon, comrades. I don't know why I decided to go into a Russian vampire voice, but hey, you know what? It's my show. I can do what the hell I want to do. All right, let me see if I have anything else as I can wrap up here, because, again, I do have to run. Sorry for the short show, Big Eb. My bad, but I'll be, as soon as I come home from the doctor's appointment, I will cheers all of you in spirit and have a shot of whiskey when I get home. So here is the only real pertinent stuff for Monday is going to be this economic calendar. Remember, you have some... Oh, whoa. This is not what I wanted to show you guys. Hold up. Wait a minute. This isn't it. It's the wrong one. It should be... Huh. That's interesting. I guess I didn't do it right. I did the wrong one. Never mind. I screwed up. This is what happens to me when I go too quickly, I guess. So as far as what's happening for Monday, I'll tell you what's going on because I can't really show you. For Monday, you have flash manufacturing and services for the U.S. It's pretty much everywhere. You got it for the UK, you got it for Europe, and for the U.S. So that'll give us an idea as to what, I guess, what the different economies are doing. And then on that note, you have some, for Australia, you have some CPI numbers coming out as well. All right, that will do it, guys. I have to run. Talk like that at the doctor. That would be pretty funny if I did that. That would be pretty fun. That will do it for me for today. I apologize I can't go longer, but I got things I got to do. So if you guys have comments, questions, feedback, things you'd like to know, if you are new, hit that subscribe button or email me. TraderMerlin@gmail.com is the easiest thing to do. I hope you guys all have a fantastic weekend. I will say, because I'm so excited about it, I will say go Niners. I heard today we actually got Nick Bosa back. So I am very, very, very excited about that. And yeah. It's going to be a great weekend. I may not have a voice come Monday morning. I'll be like, hello, guys. We're going to talk trading today on the show, but my voice is gone. Anyway, have a fantastic weekend, everybody. I will see you all on Monday. Take care.